We're going to break down the sell-off further with Tom Lee. He's head of research at Fundstrat Global Advisors. He's also a CNBC contributor. Tom, thanks so much for joining us here today. Let's just start off with the big picture. What do you make of today, and what's your advice for investors looking to trade tomorrow?
Well, I think today's just a reminder that as much as we want COVID to kind of recede from our lives and from the markets, it's still one of the most important dominating drivers. And now we're in a seasonal period where COVID cases last year started to rise in July. So in some ways, I think it's seasonal. And it's a reason why I think July overall is just a month of chop and one where no one really should try to be a hero.
So if you shouldn't try to be a hero, what does that mean? What if you have money that you want to put to work? Are you telling people not to do it? Or are you just saying don't sell out of the positions that you have?
I just think July's, at least in my 30 years of doing research, have never been great months for people to really make big profits. So it is and I think you guys kind of hit it on the head. You know, there's a lot of uncertainty. And the one thing I don't think people should do is think that this is sort of the end of the expansion and the bull market. But yeah, for the next couple of weeks, I think it's tough. I mean, July was tough last year, and July is proving to be tough again. And, you know, when markets are strong in the first half, July tends to be pretty choppy, and I think that's playing out pretty textbook.
And so when you're looking at this July compared to last July, when, yes, the pandemic was certainly still raging, we did not have available vaccines then, are you still as worried now, even though we have vaccines, but the Delta variant is causing new worry today? Does this make sense to you that the market should be selling off because of that?
I mean, it's certainly clear that markets' wariness is rising, and the Delta variant is sort of evading what we think should be vaccine protection. And the data that we've put together shows that from a seasonal perspective, the turn up in cases today is coinciding with the turn up in cases last year. So there is some seasonality, I think, to COVID, probably because of the air conditioning season in the South. But like last year, cases rose for 8 weeks, but the stock market just had an initial sort of wobble, and that's what we're experiencing now. And then, the cyclical trade came back on in force. So I think people don't, we shouldn't extrapolate and say that we've lost the war against COVID. But, is the market acting textbook into COVID cases? Yeah, I would say so. So I think, again, the message I would have is it's not a month to be a hero. July is typically choppy, and I think it's a choppy month.
Tom, it's interesting, over my career, the commodities typically lead their associated or correlated equities, but we're seeing, what I'm seeing at least, I'm sure you've seen this obviously as well, some of these energy stocks have just gotten obliterated, and now the commodity seems to be moving. So I guess my question is the worst priced in terms of the equities, maybe a little more to go on the commodity front, but have these equities sold off where they're starting to get interesting again?
Yeah, I mean, Guy, I think that stocks are still going to have a double-digit second half. So any sell-off we're seeing in July is not something that you have to the market has to dig itself out of. But you're absolutely right. I mean, in a month when markets wobble, we have a buyer strike. Commodity stocks were leading year to date, so they're vulnerable to profit taking. So it's been an absolute massacre. But again, I look at this tightness, especially in the oil market, favorable for the price of oil, capital discipline by the energy companies. So, again, as painful as this sell-off's been, I think they're going to have a strong second half.
Tom, thank you for joining us. We are going to be on the lookout to see what that second half indeed does hold for us. Let's go ahead and trade this. Jeff, I want to get you back in on the conversation. What do you make about what Mr. Lee has to say there? July just a lousy month, but a double-digit second half?
I certainly think it's possible, right? And the weakness that we've seen, he talked about this a little bit on Friday, the weakness that we've seen today more at the index level, it's been going on under the surface for some time. So it's been choppy really for months. If you look at the average stock in the Russell 1000, I think it's about 10% off its recent 3-month high. So this is weakness that we're now just starting to see at the top of the market. And Dan mentioned how important tech's going to be over the next few weeks. I agree, because that's really what's been masking some of the weakness. So from an index perspective, I would pay attention to those names, but there are opportunities under the surface because you've already seen weakness play out in a lot of other areas of the market. And just relative to energy, again, I know we'll touch on it more later, but I do think some of the dynamics relative to the price of the commodity will likely work itself out over the next number of weeks. I think the supply-demand dynamics probably positive for the price. And energy equities have just moved so dramatically to the downside. Talked about this during our call earlier today, but 0% of energy stocks are above their 50-day moving average. So there's definitely opportunity if you look in the right places here.
Dan, I want to bring you in here as Jeff pointed out what you're thinking about technology. It actually was one of the better performing groups, though still down more than 1.4% here today. What do you make of technology? Expound on those thoughts a bit.
Yeah, there's two buckets, right? So we have these super caps, and we know, like Jeff just said, that they've really helped the broad market really buoy itself as there's been a lot of correction, going on underneath the surface. But I will mention this. I mean, look at some of the performance of some of these high growth stocks. Maybe there were recent IPOs that we've seen over the last, year and a half that have had these explosive runs, but they had a massive correction off their highs in the late fall or earlier this year. They had big runs off their May lows, some of them 50%. And I'll just mention one of those was Zoom, and they just bought a company today, or they announced using their cash, a $15 billion acquisition. This company went public about 2.5 years ago, and they got a $10 billion market cap. So I think that what's really interesting to see that some of these names are now understanding that they're going to use some of this currency that they have, that they've been granted by basically like proving their business model during the pandemic. So I think that's a really interesting thing as far as tech's concerned. So we might start to see some more M&A, which might be perceived as bullish.
Shepard Smith here. Thanks for watching CNBC on YouTube.